If you're interested in cryptocurrency and you don't know where to start, then you're in the right place, because today I'm going to give you a beginner's guide to cryptocurrency and give you everything you need to know to dip your toe in or to get started, or even if you just want to learn a bit more. I'm not going to shill you any coins. I'm not going to try and get you to invest in something strange which you've never heard of. I just want to give simple information. And full disclosure, I am fairly new to cryptocurrency myself, so I'm not going to give you some crazy advice or anything, but I just wanted to share what I've learned so far in my short journey into cryptocurrency, because I think it is such an interesting concept and something that has been growing. But of course, there are quite a lot of risks to it. So while I do think that cryptocurrency can be a great part of your portfolio, just be aware of a few different things. In the comments, there may well be some scammers or people impersonating me. I know I'm not that famous and I don't have many subscribers, but you know what, that's okay. Just be careful of what's in the comments. Don't click on any links. Don't go on any people who claim they've got the next big thing, and just be vigilant and careful. And hopefully, by the end of this video, you'll have a basic understanding of what cryptocurrency is, and you'll be able to see whether it's right for you to invest in or not. So, of course, as I said, I am a beginner and I want to try and explain things in a beginner-friendly way so that at the end of this, you're not coming away going like, whoa, what the hell did I come into contact with here? And it is going to be a long video, so please do bear with me, and you can use the description to find which parts of the video you want to find out most about, and I'll also leave in the description a lot of different links where you can find out more information, because even though this is going to be a long video and I want to take you through it step by step, I am a beginner, so I'm hoping that I can explain it in a way which is going to be beginner friendly, because I'm not too far deep in it that, you know, I'm completely lost in all the maths and everything. So let's have a quick look then. So before we even get into, you know, cryptocurrencies themselves, it's important to understand the fundamentals and the basics, because if you can't understand what cryptocurrency is and why it exists, then how are you even going to invest in it, basically? All cryptocurrencies are based on cryptography. What is cryptography? Cryptography is basically using advanced codes and maths to secure the network so that people can't access it. So it's not just a case of A plus B equals C. There's a huge amount of work that goes into cryptocurrency and cryptography. Cryptocurrency can obviously be broken up into two things. So you have crypto, which is where the crypto comes from. It's cryptography. It's advanced maths, which allows the network to be secured by using lots of different formula and lots of different complex equations which go way over my head, and which you don't necessarily really need to understand exactly how it all works. But it's important to note that it's, you know, it is safe and it's designed on cryptography so that it is secure. And then currency, obviously we all know what a currency is, just like pounds, euros, dollars, yen, etc. But this is digital, and we'll come more into kind of the differences between cryptocurrency and regular currency a bit later on. Most cryptocurrencies, or all cryptocurrencies, are secured on a blockchain. So what is a blockchain? So you can see here, there are a list of blocks that I linked together using cryptography. So each one contains like a hash and a timestamp, and basically a record of what transactions have taken place on that blockchain. The way that I like to think about it is like a giant Excel spreadsheet filled with all the information of what has happened on that particular network. And you might say, well, who has access to this? Who controls this? Every single person who's involved in the cryptocurrency and the blockchain has access to this so that it can be verified along the way. So you can't just kind of say, okay, well, I'm going to add myself in 5 million extra currency here, and then everyone else can see it. So they have to verify the fact that that transaction has taken place correctly and accurately, and everyone has the same up-to-date version of the blockchain. Now, you don't need to be, you know, too aware of this. It's not like necessarily stored anywhere, and you don't have to look through it in order to kind of do cryptocurrency or anything like that. It's just something to be aware of. That's how it actually works. It works using these blockchains, and each block is verified by everyone on the network, which is why it makes it secured, because everyone kind of has the power to see what transactions have taken place, when the transactions have taken place, so everyone has access to the data, but in order for a transaction to be successful, it has to be verified by everyone. So I hope I've not lost you yet, because this is just the start, but I'm hoping that that kind of makes sense. I mean, you know, it's not absolutely essential that you understand all the intricacies, because I remember when I was first reading it, I was like, what the hell is this? This is mind-blowing just how it works. But blockchains and stuff have a lot of applications for the future beyond cryptocurrency, but that is a video for another day. So what does cryptocurrencies actually do? So now we've understood the basic kind of things of what a cryptocurrency is and what cryptocurrencies are built on, what does it allow you to do? So the first thing that it allows you to do is it allows you to have a digital store of value. So traditional stores of value in terms of like physical assets would be classed as like gold, precious metals, silver, copper, etc. And I guess it's like a digital version of that, potentially. Some of these can be perceived as a digital store of value, such as Bitcoin would probably be the main one that you have heard of, but we'll come onto some of the uses a bit later on. Cryptocurrency also allows you to invest in future projects and further their development, essentially. So there's a lot of different exciting projects in the works, and if I was to go through every single one and every single cryptocurrency and what they actually do, we would be here forever, and I do not want to kind of bore you that much, but there are some really exciting ones later, and we'll go through a couple so you can see what I'm talking about. Cryptocurrencies also allow you to potentially vote, so it's called like governance. With a traditional company, you would have corporate governance where a board of directors would decide what changes are going to happen with the company, and essentially they would have to keep a record of this, and then everyone within the board of directors would vote on what is happening with that. With cryptocurrency, because it's much more open source, it's decentralized, and like I said, it's between everyone who has a vested interest, some cryptocurrencies will allow you to vote on what is going to be on proposed changes to that particular coin or to that particular project. So this is called the governance, and owning some of cryptocurrency can enable you to do this, so you can be involved in the future of these exciting projects. So as I alluded to earlier, cryptocurrency, generally speaking, is decentralized finance. So there are some more centralized ones, and certainly some countries such as China are looking to provide a centralized digital currency, so like the kind of digital yuan, for example. And this is something which increasingly governments and countries are looking into. However, the original purpose of cryptocurrency, and especially Bitcoin, was that it's decentralized, i.e. it is not kind of, I was going to say it's not regulated, but it's not kind of, transactions don't go through like one centralized organization there, and that's the whole point of the blockchain, is that it goes through everyone and everyone can verify it. So then in terms of the difference between a cryptocurrency and a regular currency, you can see this picture here. Cryptocurrency generated by computers, so it's all online. You can't visibly see it apart from like charts and stuff, and you know, on your different exchanges and stuff, which we'll come to a bit later. Whereas fiat currency, or you know, like dollars and regular currency, this is issued by governments. So in theory, the kind of supply is infinite because they can just print more money when they want to print more money. Cryptocurrency is decentralized, like we said. It's no one can control it, which offers more security because everyone has to verify it. But it also means that, you know, there's less likelihood of manipulation because people involved within the cryptocurrency have a vested interest to keep it going and to further it for the most part. And then regular currency is centralized, i.e., as we said, regulated by or monitored by the government and potentially banks. And then cryptocurrency is digital and regular currency is physical. There is a limited supply of cryptocurrencies. We'll see that a bit later when we look on a website called CoinMarketCap and we look at some individual cryptocurrencies, and you can see that each one has a limited supply. So this kind of determines the value as well. And with regular currency, there is an unlimited supply. So with cryptocurrency, you might be thinking like,
well, if all cryptocurrency is the same, why are they all competing against it? Why are there so many cryptocurrencies out there?
I mean, you may well have only heard of one or two of Bitcoin and Ethereum, or maybe a couple of other ones, but there are literally thousands of cryptocurrencies out there all the time. And you might be thinking, well, surely you only need like one way to pay for things. Like we just have the pound or like the dollar or whatever. So why do we need additional ways to pay for things? Well, this is where it's important to distinguish the two different things, because while all of these class as cryptocurrencies, not all of them do the same things. So some of them are coins, so they are cryptocurrency coins, i.e. these are things which are built on their own blockchain. So this is the definition of a cryptocurrency coin, and generally speaking, as I said, they have their own blockchain, and most of them are used for payments and this sort of thing, so they can be issued directly to pay for things. Obviously there are some exceptions to the rule, but that, broadly speaking, is one of the two different types of cryptocurrencies. And then on the other hand, you have cryptocurrency tokens. So these are projects and things which are built on existing blockchains. So as a simple example, and to hopefully demonstrate this, we have Ethereum. So this is probably the biggest and most popular blockchain at the moment, and this in itself is a cryptocurrency and a cryptocurrency coin. So they have their own cryptocurrency network blockchain, and everything on this. So if something is built on the Ethereum blockchain, then for a transaction to take place, they have a fee which is called a gas fee, and this takes place using a small amount of Ether, or like the kind of the coin or the currency of Ethereum. I hope this is making sense. So say, for example, you wanted to buy a coffee. Obviously, we wouldn't be necessarily buying coffee with Ethereum at this stage, but say you wanted to buy a coffee for 1 Ethereum, and you have a small transaction fee for buying that coffee using the Ethereum blockchain and using the Ethereum network of, say, 10 or 0.1 Ether. This would be called the gas fee. It's just the same as if you were transferring currency in between one currency and another currency if you were using real currency. So say you were transitioning like 50 euros to $50, there would be a small transaction fee which would be in one of those two currencies, which you would get charged in order to kind of use that currency exchange, and generally speaking that would go through the currency exchanging, through the foreign exchange. I hope that makes sense, but basically, yeah, for using one particular network, or if you're using a blockchain, then there will be some fees associated with that, and how high or low those are depends on which one you are using. But whenever you make a transaction, then it will tell you how much the fees will be, and I will show you this a bit later on in practice so that you can kind of see how it actually works. Hopefully this will be the last complicated part, and I'm going to try and explain it in a fairly easy way. So in terms of the cryptocurrencies themselves, generally speaking, there are two big ways in which the network is secured and which transactions work. And one of these is called proof of work, and one of these is called proof of stake. So proof of work, like we said, this is all to do with cryptography and using advanced mathematical equations and puzzles which only computers can solve and which are too complex for humans to solve. So with the proof of work way of security and verifying the next block on the network, this is used by things such as Bitcoin. And again, this is important to understand before we look at investing and how we can actually invest in it, which I'll come to very shortly. So with proof of work, this basically requires the computer to figure out what the solution to a problem is by eradicating all the other solutions first, and the first one to complete the puzzle basically gets the reward and gets the Bitcoin. So let's say, for example, we had 3 different computers going on here, and all of them are trying to find out the answer to the equation of 5 plus 7, which obviously the answer would be 12. And that is obviously a simplified example. You wouldn't be getting a computer to do this. So say miner 1, so this would be computer 1, they try 10 and find that the answer is incorrect. Next they try 13 and they find this is incorrect. Next they try 9 and they find this is incorrect. Whereas miner 2, so this would be computer 2 from a different part of the world and a different computer, they try first of all 17, which is incorrect. They then try 8, which is incorrect. And finally they guess 12, which is the correct answer. So therefore, they would get the reward, they would get the next block put on the blockchain, and they would get that currency as a reward. So this is how it's secured, because once that transaction is complete, this is then uploaded onto the blockchain, so onto that giant Excel document, so that everyone can see it and verify that that answer is correct. Because these puzzles only work one way, so they can't be kind of put two ways. So once they have the answer, this is then put on the network and all the computers can go backwards to see that this answer is correct and that 5 plus 7 does, for example, equal 12. Are you still with me? And obviously this happens on a much larger scale and with a lot more complex complex sums and equations than this. Next, we have proof of stake. So this is basically a less energy intensive way of getting currencies. So with proof of stake, it's essentially like, I would liken this to putting money into a bank where the money can be used for different things. So with a bank, if you put money into a bank, you get an interest rate in return for holding your money within that bank, and it allows the bank to do what they want with it and to kind of, you know, make more money with it, ideally, if they want. So proof of stake is essentially the same thing. The way that it is secured is you put a certain amount of your currency, of your cryptocurrency aside, and you say to the network, okay, I'm going to put these aside, and this will allow the next block to be created. And by getting this created, you will get a return. So like you will get some sort of small return based on how much you put in. So the more that you put in, the more you're likely to get back in return. So it is almost like an interest rate. And then basically your chance of getting the reward, so getting that currency or whatever, is based on how much you put in. So say for example, there's 1,000 coins of a certain cryptocurrency in circulation. You put in 100 coins as a stake. Your coins are then locked in. You cannot sell them. You can't do anything with them. They're locked in, and in that time, you have a 10% chance of getting the reward, so getting the currency. This is because obviously 100 over 1,000 equals 10%. So with that proof of stake method, again, this is kind of uploaded onto the blockchain, and the reward is randomly given to someone based on how much they have staked. So obviously the more that you put in, the more likely you are to get the reward. And this is how the network is secured, because all the currency is kind of, well, as I say, it's up to you if you want to stake your currency, but this allows the currency to be further developed. So hopefully that's the complex bit out of the way, and I hope that this is making sense so far. If it is, please do give me a like, because it's taken me a little while to put this together, and I hope that this is going to be useful for you. But now let's have a look at some cryptocurrencies themselves, so you can see kind of what they are and more about them. So we're going to have a look on CoinMarketCap here, and on here this basically shows the cryptocurrencies by kind of market cap, and so how much people have invested into them essentially. So on here you've got Bitcoin, you've got Ethereum, Tether, Binance Coin, Cardano, XRP, which is Ripple, you've got Dogecoin, you've got USD Coin, Polkadot, Uniswap. So let's have, and also you can kind of filter by categories and DeFi and NFTs, which we'll have a look at a bit later. NFTs, the quickest way for me to explain what an NFT is it's basically the rights to something. So for example, the video for Charlie Bit My Finger, that's just been made into an NFT. So essentially when it's become an NFT and like you buy it, you basically own the rights to that thing. So for example, it's just been taken off YouTube, the Charlie Bit My Finger video, and it's going to be sold as an NFT. So once that is sold, I think it may already have been sold, then the person that has bought that NFT owns that video themselves. Now, basically that's how it works. And it is verifiable on the blockchain because everyone can see that transaction take place. Now, let's have a look at some categories. So on here, you can see the different categories. So you've got jobs, sharing economy, real estate, analytics. Yeah, I mean, some of these are just words. You're not going to necessarily know what they are. But if we have a look at some of the biggest ones on here and the kind of different the different cryptocurrencies. We can see Bitcoin here, so this is probably the one that you would have most heard of. And CoinMarketCap is quite a good website to get an overview of what a cryptocurrency is. I mean, obviously it's not kind of, you know, you don't want to read this and then go all in and YOLO all your money away, because that is not the way to do this. So just to kind of walk you through roughly what this website is, you've obviously got the price here of what Bitcoin is. And then you've got a few different sections here on the left-hand side where it's explaining kind of that you've got a white paper. So that basically explains what the cryptocurrency is. And I think that's written by the kind of developers. So like I was saying before my camera rudely interrupted me, this is quite a good place to get an overview of what the cryptocurrency is. So if you're just intrigued and you want to find out a little bit more, it can give you an overview. Of course, if you want to find out more, you can read the project website. There's a load of research that you can do and that I would advise you to do before you would put any money in and invest. So, and we'll come to a lot of the risks later as well, so you can kind of figure out, you know, whether this is going to be right for you, whether this project is good or bad, and you can make your own decision on that. I'm not going to advise you anything on that because I am not responsible for your financial choices. Anyways, if you're wanting to figure out exactly what a particular currency is or what Bitcoin is, you can see down here, so on almost all of the cryptocurrencies, there'll be a section at the bottom which says, what is this cryptocurrency? And then who are the founders and what makes Bitcoin or that particular cryptocurrency unique. Now, one of the things to be aware of with cryptocurrencies is that for the most part, the founders and the kind of uniqueness bit, it can be pretty complicated and it can not make sense, but that's okay. You know, to begin with, that's fine. Get a bit of a flavor for it, get an understanding for it. Try not to get FOMO, try not to get fear of missing out. Yeah, make sure you kind of understand what you're investing in, because that is important. But some of these, one of the big red flags for cryptocurrencies, especially with some of the new ones, and this is how people are getting scammed as well, is they invest in cryptocurrencies where they have like no information about the founders. The project doesn't really have a purpose and it doesn't have much about it. So be careful. Word of warning, be careful, because if there are no founders to a cryptocurrency, there's going to be no accountability. And with that, you're just going to get scammed and you lose your money potentially. So this is one of the other ways. So like we'll have a look at Ethereum here as well. You can have a quick read of that. And you can see on here all of the different information. I'm not going to go through it because clearly you can read for yourself, and there'll be links to this in the description, so if you want to have a look through it then you can. Where to buy cryptocurrencies. So cryptocurrencies for the most part are bought on exchanges, so similar to with stocks and on a stock market, you would buy those through like a broker. So through, for example, in the UK, Hargreaves Lansdown or AJ Bell or Trading 212, you would make an account with them, you'd deposit money and you would be able to buy stocks. It's the same for cryptocurrencies. You have an exchange like Binance, for example, and then you have exchanges like Coinbase and various other different ones where you can buy cryptocurrency, and it is pretty straightforward to use. I really like Binance because there's a lot of different ways to do it, and I will show you roughly how you can do it with a couple of different things. So if you are a complete beginner and you're looking to buy, this is probably your best bet. So I'm not logged in at the moment, but you know, if you were to kind of go on an account, so Convert is definitely the easiest way to do it. If you just want to buy like some basic cryptocurrency, this is a really easy way to do this. So on this Convert method here on Trade, you'd click on this, it would bring you to this screen. This is really straightforward to use, and then you can choose which currency you want to go from. So say that you've just invested some pounds into your account. So obviously to do that, you'd go on your account and you could deposit. So you can pay by deposit. Obviously with some of these, there will be fees. So if you're using Binance, for example, then the fees will be in Binance coin. So you would probably need to buy a bit of Binance coin before you can make some transactions. And there's lots of different ways. And if you do want to kind of make a Binance account, or you're looking to get started, if you use the link in the description and in the pinned comment as well, then you can get a little discount on your fees, which is always a nice bonus. Don't say I never give you anything. Anyway, so once you've got some pounds here, let's say you want to buy some Bitcoin, all you would have to do is, say you wanted to buy £50 of Bitcoin, you don't have to buy like one whole Bitcoin, by the way, because, you know, we've just seen on the prices that Bitcoin's about $37,000, and don't think that's a huge barrier. You don't need $37,000 to start buying Bitcoins. You can literally buy like £50 of Bitcoin if you want, and that will be like, I don't know, I'm not even going to do the maths, but that will be a very small decimal of Bitcoin. You can preview the conversion on here, and that will tell you exactly how much that you're going to get, what the fees are, etc. And then you've bought your Bitcoin, and then it will be in your wallet. So this will be in your exchange wallet and your spot wallet, which basically gets a bit complicated there, but you know, to keep it simple, your spot wallet is basically, you know, what you can buy. So for example, if something's in your spot wallet, you can use that currency to buy a different currency or to exchange a different currency. If you wanted to make it a bit more easier, a bit more difficult, or you're ready for that next step up, you can go onto the classic one. And trust me, when I initially saw this as well, I was very overwhelmed, because you look at this and you think, oh my God, look at all these options, look at all the charts, there's red, there's green, there's letters everywhere, I don't know what I'm doing. But again, this can be simplified. So up the top here, we've got BTC and USDT. So if you wanted to buy Bitcoin on here using pounds, you would look for BTC/GBP, which would be pounds, and you can type that in at the top, and it will, again, you can go through the same process. It'll tell you what the conversions are, how much you're going to get, what the fees are going to be, etc. The next thing to bear in mind is where you store your cryptocurrency. So when you're looking at cryptocurrency, I would strongly advise getting either a hot wallet or a cold wallet, depending on how you want to store it. And this is not anything to do with temperature, don't worry. So if we're talking about a hot wallet, this basically just means like an online wallet. So it could be like an app on your phone, like Trust Wallet. This is probably one of my favorite ones on here. And by the way, there are lots of different tutorials and stuff, which I will leave in the description if you want to learn more about these different wallets and why they're good. But basically, it's really important if you're going to get cryptocurrency to get some sort of wallet, because this just means that your cryptocurrency is secured even more. If you store your cryptocurrency on an exchange such as Binance or such as Coinbase, all this means is that if Binance or Coinbase were to be hacked, that your cryptocurrency could potentially be at risk. Now, of course, hopefully, he says, that risk is fairly low, but you never know. So I would strongly advise getting a hot wallet, which the one that I have is called Trust Wallet, and I enjoy it. I think it's simple to use, and it allows you to do a few different things, which is nice, and I'll go through in a bit. Or you can get a cold wallet. So this is almost like a little USB stick, I suppose, and it allows you to store your cryptocurrency offline. So while you have like stored your cryptocurrency onto this little wallet thing, you use some apps. So for example, you would need an app per cryptocurrency that you own, so like a Bitcoin app, which you can store on there. And the one that I have of these is Ledger, and I really like it. I think it's simple to use. There's instructions on their page, and if you do buy one of their products, it is really straightforward to use. And this is personally my preference of storing my cryptocurrency, because it's more secure in a cold wallet, which is one of these, than in a hot wallet. But either way, pick your choice and go for either a hot wallet or a cold wallet, or both. You can have both if you want, but definitely with your cryptocurrency, make sure that it's not on the exchange, because that just reduces the risk and the likelihood of it getting hacked and it being at risk. So with transferring your kind of cryptocurrency from a exchange into one of your wallets, I will show you how to do this now. So this is fairly straightforward, and it does seem very complex to begin with. So what you would have to do, and it's not as simple as kind of doing, I guess it is as simple as doing a bank transaction, but you've just got a couple of extra steps. So on your exchange, let's say with your £50 of Bitcoin that you've just bought, you would have to go on send. And so you'd go into your account and you'd click on send and Bitcoin, and then you'd enter the amount that you want to send. What you would then have to do is go on to where you wish to receive your Bitcoin. So say if you were going onto your cold wallet, so for me this would be into my Ledger account, I would then go onto the receive section and on Bitcoin, and it would go, and then I would get the address. So this is basically like the unique kind of address or token or whatever for this particular transaction and for this particular coin, and I would copy that across, paste it back into the Binance, for example, if I'm using that as my exchange, and then I would be able to transfer it across. You could preview the conversion, how much it's going to cost, and then it would appear in that account after a few minutes after the transaction is complete. And as I said earlier, just make sure when you are transitioning it across that you have the appropriate currency stored for the fees. Now, if you're wondering, as I was, because I found this very difficult to get my head around, especially this is a bit easier to understand on Trust Wallet. So using the hot wallet, you can get an understanding for the sort of kind of network and that you're getting. So for example, if you were to use Trust Wallet and you were to transfer your Bitcoin across to the Trust Wallet, it will say at the top of the transaction on Trust Wallet of your hot wallet what network it will be using. So for example, if it was using Binance, then it would probably say BEP2 at the top. If it was using Binance Smart Chain, it would be using BEP20, and if it was using Ethereum, I think it would be ERC20, I think. But if you're unsure and you're not sure what you need, then just have a check on that top left and see what that kind of letters say, and then that will allow you to figure out, make sure that you've got enough of that currency to cover the fees and that you're going to be sending it to the right place. Because if you try and send like Bitcoin to your address and you use a different network, so say for example you try to do Bitcoin into your hot wallet and you tried to use Bitcoin network blockchain on one and the Ethereum blockchain on the other, the transaction would not work and it would be incomplete. So you have to use the same on both and check that these are the same, check that the address is the same, and then the transaction will work. And I hope that makes sense, because this was one of the things I found most difficult when starting up with cryptocurrency, and kind of, you know, something that maybe wasn't as explained to me. If you are unsure, then just Google or type in that little the network on the top so you can figure out what it was. Because I had one where I was trying to transfer one currency from the exchange across to my hot wallet, and it used TRX, so I had to get Tron as the kind of the cryptocurrency to get the fees, and I didn't understand why it wasn't working, but that was because I was trying to use the wrong one and the wrong networks for it. So just bear that in mind. With cryptocurrency and with some of these tokens, you can get decentralized apps. So I'm going to use Trust Wallet because as I'm not, you know, hugely experienced at this stage, to show you some decentralized apps, and in particular one called PancakeSwap. So with PancakeSwap, this allows you, it's a bit like an exchange, but it allows you to do a bit more than that, and you can kind of stake on there. So if you're using a proof of stake coin, such as Ethereum, it will allow you to stake on there, and you can get some potential cryptocurrency as your returns in order to, well, for your reward for freezing your cryptocurrency up there. So that's one way to use PancakeSwap, and there's a load of other decentralized apps on there which you can see here, and they allow you to do various different things. So some allow you to do NFTs, some allow you to do other things, but of course, you know, before doing that, I would grasp the basics, and hopefully at this stage it's allowed you to, if you wish to purchase some cryptocurrency, then it has given you the knowledge to do so. Now, that hopefully is a rough basic overview of everything so far. So what other things should you be aware of before you invest in cryptocurrency, or before you kind of YOLO all your money onto Dogecoin or Bitcoin or whatever the other next big thing might be? One of the biggest things is volatility. If you haven't come from investing in stocks and shares and this sort of thing, or even if you're completely unfamiliar with investing whatsoever, one of the biggest shocks to the system is the volatility that is in cryptocurrencies. With the stock market, it's like, for example, it drops by like 2 or 3% in a day, and that is considered a big move for the stock market in like an index fund or something. In cryptocurrency, that is just small fry. You regularly see drops of like 20, 30, 40% sometimes, and gains of 30%, 40% in one day. So you could see days, where your investment goes up $1,000 or £1,000, and you could see days where it goes down £1,000. That is just the nature of cryptocurrency. It is a risky game, and there is a lot more to it, and it can be difficult to stomach the losses. So if you're not prepared for the volatility and to ride that out, then don't get into cryptocurrency. Or if you do, then just be aware that is one of the big risks and something to be aware of. Also, cryptocurrency trades 7 days a week, 24 hours a day. So it's not like the stock market where you have certain closing times and certain opening times. You can trade cryptocurrency throughout the day, and the markets are open all the time. So that's also another thing to be aware of. The next thing is scams. Now, as I alluded to earlier, scams have become more and more prevalent on cryptocurrency, as it's just been seen as an easy way to make money and to become a millionaire. You can make easy money on cryptocurrency, but it's all too easy to be scammed as well. There's a lot more risk with cryptocurrency, and you can make a lot, but you can equally lose a lot. Especially with lots of scam coins. There's been several stories recently where crypto founders have set up a coin, they've got people to pile in because they're really good at marketing and getting people on board. They know how to market something. People pile all their money in, and then they just run off with the money. And because of the nature of it, it just means it's a bit more dangerous, because there's not much in the way of being traced, especially if, as I said earlier, some of the coins founders are anonymous and they're not kind of named. It means there's a lack of accountability with that particular cryptocurrency. So just be aware, if someone is telling you to buy one particular cryptocurrency, or they're saying, oh, this is going to be the next big thing, just be careful, have a read up about it before you kind of go into that, because that can be very dangerous. And the same goes with YouTubers and the media. Equally, sometimes people are, even like celebrities or people involved in cryptocurrency, like there's a lot of cryptocurrency, cryptocurrency influencers, I suppose that's the term for them, but some of them will get paid money to say to their followers, go and buy this coin, this is going to be the next big thing, blah blah blah. So even if it's someone that you in theory trust, just take a few seconds, do a bit of research and figure out if that is actually the case, or whether it is a pump and dump scheme. Because a lot of the time as well, you can buy into the hype, watch the cryptocurrency go up loads and loads and loads, and then as soon as the price gets to a point where everyone's kind of buying in, then they'll dump it, they'll get rid of all their coins, and the value will tank back down. So that is actually quite an important point to bear in mind. Also, one of the other things to bear in mind as well with cryptocurrency at the moment is that there is not much regulation in it, and this could be something in the future that either scuppers cryptocurrency or makes it even better. And for example, with China trying to create their digital yuan, and Britain and America trying to create their own digital currencies, it could well be that this becomes the future in terms of added regulation, which could lead to less ability to have decentralized finance. And with the amount of currencies that are currently out there, there's like literally thousands of cryptocurrencies out there. It's the same as companies, not all of them will survive long term, and it's likely that many will fail. So regulation at the moment there's not much about, but overnight something could be created which just wipes out completely. So please do be aware that cryptocurrency is not necessarily a safe space for your money, and if you are getting to get into cryptocurrency, then I would advise not to put all of your money and all of your lifetime savings into it, because there is always the possibility that it could get heavily regulated and you could lose a lot overnight. Additionally, taxation. At the moment in the UK, cryptocurrency can be taxed via capital gains. So at the moment you can get £12,300 of gains, realised gains over the course of the year. And of course, there's no real tax efficient way, you know, like with a stocks and shares ISA or something, that you can have your cryptocurrency. So that is also something to be aware of. And by realized gains, this can be even from transferring it from one currency to another. And it's not literally just, oh, if you sell it and then you do another transaction, it involves all of the transactions. And also don't forget that this is not just for cryptocurrency as well. This is for stocks and shares and anything else which is not in like a taxable, in a tax-free or a tax-advantaged account. All of this is eligible for capital gains. So please do make sure that you don't go over that, because otherwise the government's going to come chasing you for money and nobody wants that. Another thing to be aware of is that many of the cryptocurrencies and stuff and the price fluctuations and the volatility is based on news. So if there's some positive news which comes out, or Elon Musk does a big tweet about Dogecoin, the price, generally speaking, will go up quite a bit. And equally, if there's no news for a while or there's some bad news, the price can tank. And again, it's the same as, I guess it's the same as within the stock market, but it happens to a lot bigger extent, and the fluctuations are so much bigger with cryptocurrency that it can make you think twice. So just be aware that just because something rises up 50%, it doesn't necessarily mean that the fundamentals have changed or that it's becoming a better investment. It just can potentially mean that there is some news. So after all of that, I hope I've not lost you and you're not falling asleep, and that this has kind of been useful. How do you tell if cryptocurrency is right for you? Well, this is where I'm going to throw it over to you. Hopefully I've given you a bit of information, and well, a lot of information, let's be real. This has been a long ass video, but I hope that this has given you everything that you kind of need to figure out whether cryptocurrency is potentially right for you or not. Like I said, I am clearly not a financial advisor, and I am a beginner as well. So please don't, kill me in the comments if I got one little thing wrong or a couple of things wrong. I've tried my best with this video, and I've tried to explain it in a way which is hopefully going to help you to understand a bit of cryptocurrency knowledge and the basics. And I'm sure that over the next few months and years, I'll learn a lot more about it. And I think it's such an exciting space, and something that I should have got into a lot earlier. I know everyone says that, but part of me wishes that I'd kind of diversified into cryptocurrency a long time ago alongside my kind of regular stock portfolio, because I just think that it's the future, and there are so many possibilities and so many exciting projects that are on the way, which I should have got involved in sooner. But I think in the future, cryptocurrency will become even easier to buy, and we'll learn a lot more about it. So if you're still not sure and you want to figure out some more about cryptocurrency, as I said, I've left some links in the description. Please do seek financial advice if you feel that you need it. But otherwise, please do leave a like, leave a comment, and all the rest of it, and I'll see you in the next video.